According to Howard Marks, if there are bargains, where would they originate from, and what causes them to materialize? As one of the biggest distressed debt investors in the world and a co-founder of Oak Tree, when Howard Marks speaks, people pay attention. One of the most important people in the investment industry, Howard Marks, is a huge believer in battled dividends, which have an extremely high yield and the potential to earn thousands of dollars each month. Therefore, we're going to discuss all 6 of these high-paying dividend stocks today, along with the reasons you should think about investing in them and the amount you need to put in to get a $4,200 monthly income. But first, let's define monthly dividend stocks. Unlike the regular dividend stocks you've probably heard of, monthly dividend stocks are unique in that they pay out dividends on a monthly basis rather than the quarterly or annual payouts that are typically associated with regular stocks. These stocks are typically sourced from companies that have a strong commitment to providing their shareholders with stable income and consistent cash flows. But here's the thing: the benefits that these monthly dividend stocks offer are insane. To begin with, the regular monthly payouts give investors a regular, consistent income stream that they can use to better plan their budgets and finances. As a result, investors who require dividend payouts in short cycles to cover living expenditures may find this to be quite helpful. If not, however, it may still enable the investor to generate large amounts of passive income without having to exert any effort. In addition to all those delicious benefits, monthly dividends can also provide you with consistent cash flow that you can reinvest to increase your wealth over time. Compounding interest can substantially accelerate the growth of your portfolio and potentially improve your long-term returns. When it comes to investors who are all about the Benjamins, whether they are retirees or simply seek a steady stream of passive income, monthly dividend stocks are really more tempting. What could be more reliable than receiving monthly dividends? Your financial stability will increase significantly with such consistent distributions, but how can one choose the best monthly dividend stocks? That is the million-dollar issue. Howard Marks has long maintained that successful investing is not the result of making decent purchases, but rather of making quality purchases. How can we achieve this? By considering the appropriate selection criteria. And how can we determine what the selection criteria are? When investing in monthly dividend stocks, the first thing you should think about is their yield. You might be wondering why, and the answer is that the yield will inform you how much money you can obtain from the dividends in comparison to the stock's price. In Howard Marks' book on how to master the market cycle, he talked about issues like this, but one of his quotes stands out the most. "The less prudently others conduct their affairs, the more prudently we should conduct ours." This brings us to the second criteria, which is to consider how stable the company actually is you seed when it comes to monthly dividends. Please make sure you do your homework quite well. High-yield dividends often mean danger. It could be a sign that the company has a lot of debt, plus not every company can even maintain it over the long term. You should choose businesses with sound morals and sound finances. Lastly, you need to think about the company's potential to keep growing and expanding over time. Essentially, this means that you will need to find stocks that have the potential to increase in value over time in addition to paying regular dividends if you want to jump on the golden train of monthly dividends and take advantage of its consistent payouts. If a company checks all these boxes, a sturdy foundation and a healthy history of steady earnings, you can be rest assured that the company will continue to pay dividends. From the lowest yield to the highest, these 6 top monthly dividend stocks are ones you should think about acquiring as soon as possible. If you stick around, you'll find out how much you need to invest in these stocks to earn up to $4,200. Prospect Capital Corporation may offer a reliable and consistent passive income stream, which is one of the reasons it's one of the most alluring business development businesses available today. However, there are a few reasons why you should acquire it in the first place. To begin with, its 13.2% dividend yield is exceptionally high, more than 6 times higher than the average dividend yield of the S&P 500 index. In case you didn't know, Prospect Capital is a major player in the market when it comes to providing private equity and debt funding to middle-market companies with 100 to 2,000 employees. These companies are typically too small to be customers of commercial banks, but too big for the small business representatives of retail banks. and there isn't much competition in this niche. Prospect Capital is a reasonably good portfolio hedge against interest-sensitive securities like REITs and utilities. Its only flaw is that its performance tends to lag during times of abnormally low interest rates. Nevertheless, Prospect Capital has been able to secure many alluring deals. Investing in Prospect Capital, one can benefit from its growth opportunities and impressive performance in the market where there are very few competitors. Oxford Square Capital Corporation, which has a dividend yield of 13.5%, is the next stock on our list of monthly dividend stocks that you should consider buying. This is especially true when rates are declining. In addition to actively pursuing lucrative investment opportunities across a range of sectors, Oxford Square Capital Corp. operates as a business development company, which is a unique entity that resembles a hedge fund. Oxford Square Capital invests in a wide array of opportunities with a focus on what could be termed as Goldilocks companies. Businesses that fall between the extremes of size and scope are those with yearly revenues of less than $200 million, which makes them substantial and viable, but too big to rely solely on local bank financing. Additionally, because the economy is constantly shifting and sometimes in unpredictable ways, a BDC like Oxford Square Capital can use its services to identify investment opportunities that have the best chance of yielding attractive returns. Howard Marks frequently discusses how risk and return are the positive and negative aspects of investing. According to Howard Marks, the hallmark of a professional is the ability to manage risk. When the market rises, which it almost always does, anyone can profit. He argues that risk is actually uncertainty about the outcome rather than the possibility of loss. This idea works quite well in this situation because, although investments always carry some risk, the firm's diversified methods offer plenty of opportunity for long-term growth and stability. With a dividend yield of 14.8%, adding AGNC Investment Corp. To your portfolio is an extremely wise move. Strong fundamentals have put the company in a fantastic position for growth, and as of right now, it is in a really decent financial position thanks to its good access to favorable financing conditions from a variety of counterparties, which has allowed it to enhance its portfolio with amazing flexibility. However, there are other factors as well, which make AGNC a solid choice for your portfolio right now. As of September 30, 2023, AGNC Investment Corporation has $3.6 billion in liquid assets, including cash and other assets. It also has a relatively high leverage ratio. Its debt-to-equity ratio is 0.01, lower than the industry average of 1.97. Data shows that the company has a noticeably smaller debt load than its peers, highlighting its financial resilience and capacity to successfully weather economic downturns. It also has an excellent return on equity. AGNC's investment's trailing 12-month return on equity, ROE, of 28.72% demonstrates its skill in wisely using shareholders' money. The company's superiority is demonstrated by its 9.26% industry average, which it outperforms. However, if you thought this company was impressive, wait until you see what's next on our list of monthly dividend stocks. Armor Residential, which has a dividend yield of 14.8% that you can use to make thousands of dollars every month. Armor Residential is an expert in government-backed residential mortgages, including agency loans with fixed, hybrid, and adjustable rates of return. Similar to other real estate equities, home loans as a real estate investment trust, REIT, APR is required to pay dividends to its shareholders in an amount equal to at least 90% of its taxable revenue. This mandate creates a framework for significant and regular dividend payments. But it's crucial to understand that a variety of market factors can cause short-term changes in stock performance. Is there any reason Orchid Island Capital, a specialized finance company, shouldn't include in your portfolio with its 16.6% dividend yield? Orchid Island Capital prioritizes home mortgages. In contrast to other real estate investment trusts, securities in the real estate sector, by giving its investors dividend payments, the business makes money from the interest payments on the residential mortgages it primarily invests in. For those like you who do not have a lot of money to invest in real estate properties, Orchid Capital Investment ensures that at least 90% of its taxable revenue is delivered to investors. Investing in companies such as Orchid Island Capital offers an excellent way to gain exposure to the real estate market and reap its income potential. By acquiring shares in this company, you can actually receive a share of the profits from the company's investments in residential mortgage-backed securities. Last but not least, the San Juan Basin Royalty Trust, which offers a dividend yield of 20.94%, is the ultimate high-paying dividend that you should purchase and hold on to for eternity. But before you decide that this stock's alluring dividend yield is the only reason it should be in your portfolio, consider the following. It can help you make thousands of dollars each month. SGT is categorized as a depletion trust, meaning that the assets the trust is buying as a partner are the fixed deposits of fossil fuels underground. But here's the thing. The extraction and sale of those oil and gas reserves determine the return on investment for SGT investors. This company is in an amazing position because over the past year, energy prices have been extremely high for drillers, which has led to inflated payouts for investors who put their money into the company. And let's not even talk about how SGT brought a significant portion of its reserves to the market, which further increased the company's returns. As a result, investing in SGT indirectly supports the fossil fuel industry, which is why it's simple to understand how the company's operations, which are linked to the extraction and sale of oil and gas reserves, affect the dynamics of the energy industry as a whole. And even though the energy industry is volatile, one can still meet their financial obligations if SGT's potential returns provide a consistent income stream, which they can now that we've covered 6 of the best high-yielding dividends for everyone to invest in. Let's look at how much money is needed to generate as much as $4,200 per month. However, in order to accomplish this, we must first examine the average returns of the 6 stocks. To review, the returns of these 6 stocks are as follows. 2 at 14.8%, 1 at 16.6%, and 1 at 20.94%. By adding up these percentages and dividing by 6, we can find the average of these 6 stocks, which comes out to be 15.64% with a fast click of the calculator. Since our goal is to generate up to $4,200 per month, we must earn a total of $50,400 annually in order to calculate the total investment required. We can then divide this annual income of $50,400 by the average return percentage of 15.64%, which comes to $322,200. This means that in order to generate the monthly payout of $4,200, we must invest a total of $322,200. But take note that this takes into account the average return on the equities and guarantees that your investments will produce the appropriate income each month. In conclusion, Howard Marks' insights into the highest-paying dividends to buy and hold forever provide invaluable guidance for investors seeking long-term wealth accumulation and financial stability. By focusing on companies with strong fundamentals, sustainable dividend yields, and a commitment to shareholder value, investors can build a diversified portfolio that generates reliable income over time. Whether it's the consistent dividends from well-established giants like Johnson & Johnson or the growth potential offered by technology companies like Apple and Microsoft, Mark's strategy emphasizes the importance of patience and discipline in investment decisions. Furthermore, his emphasis on the power of compounding underscores the benefits of reinvesting dividends to accelerate wealth accumulation over the years. By following Mark's principles, investors can navigate market volatility and economic uncertainties with confidence, knowing that their investments are backed by solid companies with a history of rewarding shareholders. As Howard Marks famously said, successful investing is about managing risk, not avoiding it. So let's apply his wisdom and build a portfolio that withstands the test of time. Don't forget to like, share, and subscribe to Investing Tutorial for more insightful content on investment strategies and market analysis. Together, let's embark on a journey toward financial prosperity and security. Happy investing!